So, hello everyone. Finally, we are here with Nikhil Choudhary, and Nikhil is a venture capitalist, and his firm's name is Nirman Ventures. So, is it Nirmal or it is Nirman?
Nirman.
Nirman.
Indian Nirman.
Nirman. Since it's about construction and all.
Yeah.
Okay.
Yeah, we wanted to have an Indian name basically because लोग कुछ नाम रखते हैं. It's like Spanish and Greek. Hindi is okay, right? Okay.
Hindi is,
We can mix it, right?
yeah.
Right. So
Even Marathi is fine too.
okay, great. So yeah, people are usually they are keeping weird names, and we thought we were trying to find a word because we started with a construction focused fund, right? Eventually, it has evolved. So our plan is we're going to focus on boring industry. So construction, mining, agriculture, just where we सब लोग ध्यान नहीं देते. So that's kind of the PR venture for pick, right? So, but what relates to construction, and then we're trying to find a name. So like why don't we pick a Sanskrit then? Right, and Nirman is not just Sanskrit but many languages that is mistake. So that kind of became it literally means to construct.
Right. So you have had a background of with construction. You have had like around 20 years of experience in the industry. What drove you towards what is the need that arose that you had to dive into this industry, and what are the things that you had to consider before quitting the industry?
Before getting into construction, that in general, right? That was long time over, man. That's literally because I didn't score well to get other trades. So civil was the only trade, but construction was something that I always was mastered at. So I wanted to join construction for. And I didn't. Those days it was like two choices between medicine or engineering. Whereas, and I dated medicine because I didn't have the patience to be with patients. So eventually, I wanted to pursue engineering, and the civil was what I kind of started with, and from there on, I got my master's in civil engineering from the US. But I never wanted to. So I kind of realized my skill set. So my skill sets were although with the technical knowledge that I had, I wanted to use it in the managerial side. Because what I realized is a lot of engineers and us as engineers, we don't get business in those days. So business school was also not very common for engineers to go to. True. So these days it has become very common. It's very apart. But those days engineers, you go do a 9 to 5 engineering job, right? And that was it. And even India back then was like, back office of the world. True. Nowadays India is innovating, right? So yeah, so I always wanted to pursue that managers with my core knowledge of engineering. I wanted to do that and the manager aspect of things because then I thought I'll be a better manager with using analytics. So that's the area I pursued after my coffee.
So Nirman basically is a venture capitalist for.
So venture capital.
So apart from the funding perspective, what all does Nirman guide a startup into? And what are the major focus areas of Nirman while growing a startup?
So we're a little unique because most of us are partners in the fund. So we're 6 partners. I'm one of the partners based out of California. Then we have partner in New York, one in Sydney, Australia, one in London, one in Dubai, one in Abu Dhabi. So we are pan over. We invest globally. And most of us in the partnership team have built companies or been part of the leadership of large scale companies. So what we bring different to the table is, capital is, there's a lot of capital in the market for founders to become, right? What they don't really get is the right true extension of their team, especially early stages, because they need a lot of help to build the business. And I'm of a opinion that someone who has not built a business before, they have nothing to do advising your hub or advising your entrepreneur. So that is the expertise that we bring in because we've ran payroll, we've scaled companies, we've seen bad days, good days, lot more bad days than good days. That's how entrepreneurship is. So that is kind of something that we can give back. So a lot of early stage founders appreciate that, especially with our industry focus. So we get openings to a lot of rounds that were already done. So we get preferred positions into a lot of startups because they clearly see that we can add a lot of sugar.
Or so basically, it's the expertise that startups look for.
It's the domain expertise and the support. There we go. Here we become an extension of their team.
So Nirman basically focuses on construction tech and clean tech. Yeah. So, I mean, construction is one domain which leads to maximum pollution to environment. It is one of the major.
It is. After agriculture, it is the second largest polluter.
Right. So, how do you find the middle point? Like in every startup that you invest or in any technology that you invest, how do you find a middle point that it is technologically viable along with it being sustainable?
Yeah, so honestly, not every startup, so clean tech and construction is our focus, but that doesn't mean we look for both those things in a startup. So, because a startup might be changing things in the construction industry, which is creating efficiencies in the mapping, right? So it doesn't. So we cannot just put in a clean tech angle just because we want to. But then there are clean startups, right? Like for example, I give you the second largest polluting manufacturing process is cement. So it contributes to 40% of the carbon emission or the global carbon emission. So and cement, as we have used it some 60 odd years ago, 80 odd, we were using the same techniques. So a lot of innovation is coming into cement manufacturing process, bottling clinker manufacturing process, and then also how do you uh, how do you make concrete? Right, because the concrete mixed designs, all of those have been done through formulas and handwritten formulas again, lots of years, decades ago, and we're still using that. But like now with AI technology, we can run multiple simulations, right? So if you give the historic data set, to the model, it can actually churn out and spit out how you can make that more efficient, what admixtures you need to add. Because think of a civil engineer, a human brain, or 5 human brains. How many iterations can they do? Versus a computer, they can perform with so many multiple language. So you can carbon capture, where you're pouring concrete, right? So a lot of different things, right? So that's on the clean side of it. So that we look.
So, like just for the civil engineers looking at you, can you just describe a particular technology that has been striking in the recent times? Some particular clean technology or construction technology
Yeah.
that uh, that got your interest and you invested in that particular.
Yeah. So we are investing in one right now. Actually, we should be deploying in the next 2 weeks. So I talk to you guys about that. I can't tell you the name, but yeah, because no, it's issue. But it's a Slovenian startup, and very interesting because they are architectural and engineering background co-founders. So they're two co-founders, but both of them have a computational design interest. So with that again, that knowledge, but the passion for computational design, they started ideating on architectural design. So architects again still we never have collected the historical data and never there's no lessons learned from our when there's a new project, everything starts with a dot and a line. That's the origination of an architectural plan. So an architect will go about to like give it out to the developer, what do you want to build? But that has already been built. We're not building that many new things. It's again a square, rectangle, surface. That's what it is. So what these guys have done is, it's called a rule-based design. So basically, they put constraints. So instead of dots and lines, they are using spheres and cubes, basically. Okay, right? And these are constrained by the historical data of the end customer, right? That they've trained the one. Now the other constraint is zoning data, right? Like how much can you build, how tall to build, that's geographically constrained. So now once you input, so let's say you put in an address, on this data set is there, you put in an address, it can spit out a whole construction level plan for you and save you immense amount of time, right? So what can be built and will generate multiple simulations again and multiple models. So that's something that we are, hopefully we can test in the next 2 weeks.
That sounds good.
Yeah.
So it is like a culmination of the computation side and the article threads. So, apart from investing, like apart from looking at the pros and cons, what are the risks that you all look at while investing in a particular?
So it depends on the stage, right? So we go from pre-seed, seed, Series A. So when you go to Series A, the startup is a little bit stable in a way where it is generating decent amount of revenue. So Series A is like they're generating at least $1 million plus $2 million, $3 million average in terms of revenue. So the risk kind of goes away from it. So our diligence is conducted mainly on the growth factor.
Okay, so like how mature a company?
What is the total addressable market? What is the TAM, SAM, SOM, right? So TAM means total addressable market, serviceable, exactly, right? So we look at that. So is the market large enough? is the team capable to deliver to that large enough market, and how fast will they do, right? Because venture capital, eventually it's a business of making money, making profits, right? So that's, for a growth stage, Series A, Series B. When you're looking at early stage, they don't have revenue. When you're looking at pre-seed, so then we focus a lot of energy and attention on the team. How long? So is it a solo founder? Is it a co-founder driven team? So we don't really like investing in a solo, although we have invested in a solo entrepreneur team, because the product was good, and the product had a lot of traction, and the sales order book was really good. But usually we try and find a team which has a co-founder, because it's like a safety system, right? Us being entrepreneurs, we know how hard it is to build a business. So there are many bad days, and when there are bad days, you need that support, right? So again, the quality of the team, what comprises the team, uh, what is the product again, what's the market sizing and everything, right? And how long have they known each other? Because you don't want to invest in something and tomorrow they have a divorce with each other, right? As co-founders, so that's also becomes a problem, right? So it's like you go background check in a way. Yeah, you have to go back first. Yeah, we get the founders' IDs, and we also run like a soft check on them as part of the process. So our diligence is like, when our investment memo comes out, it's like 40 pages, and then there's a voting process. It's not just like me who gets to decide. So there's a deal lead. So if I'm the deal lead, there's a deal team. One of our analysts is part of the deal. She's making the memo along with the deal lead. Then there's a deal chair, and then goes to our investment committee, and then there are multiple other partners. So we all get to like come up and decide, and three of our general partners would come up and vote. Oh, so what is just like you have a particular role, what is the role of your other partners in the lab? So it's like again geographically how they are positioned, right? Okay. So it's me, yeah. So one of our partners is an Australia-based partner. Her name is Maria, and she's been a green sustainability expert for long. She has had a very nice career. So she's been part of uh, she's been advisors to governments, and then uh, she's also the founder of Green Building Council Australia chapter. So she comes with that sustainability expertise. So whenever we have a clean deal, that she would take the lead on that. Then we have like an enterprise deal, which is selling to B2B. Then we have a partner who has scaled or led a business on an enterprise scale, right? So then he takes the lead. So it depends on the skill set or your matrix of each partner's skill set. And then once we are interested in a deal, that's how the team gets us. Yeah. What is the time limit? I don't think that's a correct word to use. What is the sourcing to invest, from sourcing to investment, and how long do you look into a startup, and when do you an exit? So a typical fund, a venture capital fund, is about 10 years. So 10 years. What is the start? No, so the fund remains. So what happens is, in a venture capital firms, there is a separate fund. So they start with fund one, fund two, fund three. That's how they progress. Each fund has a span of 10 years. Plus, then there are some extensions. So maximum, a fund will last for 15 years. So in that 15 years, the idea is that we have to invest, the startup has to scale, and then we have to exit. And the fund has to close. So then we dissolve the fund, that particular fund. So, a firm is a different thing and a fund is a firm governs all the funds. But there could be multiple funds that the firm is managed. Okay? So each fund has a fund life. Okay. Right? So it's basically 15 years, maximum sourcing, maximum. From sourcing to scaling and to exit. Yeah. And a lot of businesses die, of course. And so, venture capital is a high risk business, right? So it's private markets, very early stage companies. So everybody understands the high risk business. All of our investors understands the high risk business. So high risk, high reward. So usually, the traditional ratio of venture capital is that, 60%, 40 to 60% of the companies fail. They don't make money of your portfolio. Then 20 to 30% will return the capital to you. So they'll just return the capital. They'll be break even. Yeah. And the rest, the remaining, the end of it. And based on those 10 to 20%, the fund makes the profits. So they will get all the momentums, right? So that's kind of a theory, but we're trying to chase that through a fund because they're investing in more pragmatic businesses.
And, we don't have that hypothesis of scale at every cost. So we also tell our founders that make us big money in the journey. You have to scale, but there has to be a balance, right? So growth, but don't compromise on, profitability just based on growth.
So, when you are investing in a particular company, uh, is it the equity that you get, or is it the ownership, or do you just buy the entire company, or how is it different?
No, yeah, we don't buy a company. We don't buy it. So that's more of a private equity play, right? Where they go and get a majority stake in the company. We don't want to run businesses. We have ran businesses. We are out of that business now, running business. We want to be a support system. So we purely get equity stake. We invest up. So we have, each fund has a target equity that they want to get. So based on the investment, ticket size, based on the valuation that the founder has, then the negotiations happen on, what valuation do we think is realistic, and what is there an agreement there eventually? And then we'll put in the money, and based on the money we put in the ratio, we get the equity. The company now also there are early stages. A lot of investments in pre-seed seed, they happen through a safe note. So a safe note was crafted by Y Combinator some years ago, and it's a mechanism. It's a convertible note. Basically, what is the a convertible note means? It's a promise of future equity. It's a promise of future equity. So right now the company is new, so nobody really knows the valuation, because let's say they're pre-revenue or little revenue. So how do you value that kind of company? You can't value it, right? So then you agree on a certain valuation that's called a cap on that company. So you put a cap that, hey, whenever you do a price drop, so whenever the equity will convert based on a trigger point, let's say the trigger point is Series A or the next financing round, we agree that our equity will convert at, let's say, $5 million. And then there's a discount rate many times. So what happens is, let's say they end up the next round in 2 years. So they end up raising at $10 million cap. But we have already agreed on a 5 million, right? So we will pick the 5 million. Let's say in 2 years' time, they only end up raising at a cap of 3 million. So then we are at a loss, Then we will execute on the discount rate. So then we would do a 10% or 20% discount on the $3 million valuation. So that's called a promissory note, and SAFE is a form of a promissory note. So that's used a lot in early stage investing for yeah. And Europe has its own form of SAFE note, but India, US, they use a traditional form of a SAFE they use.
That's really interesting. So, how do you give an exit to a company? Like, is it do you sell it? Do you prefer a merger? Do you prefer that someone acquires it?
So we don't give an exit. The founders have to find an exit. Yeah, but
Which is the best, most profitable way of exit?
IPO is the best, right? But how many companies go IPO out, right? So, but it depends, right? It's a lot of companies go through a merger and acquisition, right? If it's a SaaS, if it's a product, it's a product company, it's a tech-driven play. And there are a lot of, and they prove that they can capture enough market, right? So then there are players that, other larger companies don't come and acquire it. So that's like, a midterm kind of an exit. But when public is a long-term play, and so that will literally go until the extension, because especially if we're investing in the early stages, then you have to wait for like 10, 12 years. And sometimes even longer for a company to actually make it public, co-public, right? So a lot of exits, and there are also options to exit in the secondary market. So if you invested, then there is a very strong investor that comes in the later rounds. Then you can, try and get that exit out of that exit, right? So there are a lot of avenues, different avenues that, you can exit.
Right. So, a very generic question, but yet a very important question. Where do you see Nirman in the next 3 years, next 5 years?
Yeah, it's, we're going to keep doing funds, basically, right? But it's a case of profitable, you don't need to scale. Yeah, it's a we scale up, of course, as we scale our fund size, assets under management, we start growing. But, we're very clear, we don't want to create a mega kind of a fund as of now, because, then it becomes a pure fund management again. And the passion out of it goes away, because the people who founded it, they are not driving the investment decisions then. So, we want to keep it to a manageable amount where, it's also, you're also passionate about it. And each one of us is also hands-on on that, and not, you just don't become, basically managers
of the money managers, right? Eventually. So, but yeah, eventually, we plan to do funds around different theses. So this one is a construction and clean. Our next one, we're still figuring out.
So do you plan to go into some other sector ever invested?
Yeah. So we would, so through this fund also, we can deviate a little bit if we find really interesting technology, but we can't deviate too much from our thesis. So maybe 5-10% of our investors can be deviated. But, in the future, we plan to do more funds. So, as we add on some lower domain expert partners, so we could do pure AI. So we'll find for core industries like mining, agriculture, or construction, right?
There could be a robotics fight. That's again for the boring industries, as we call it, but with a large market cap.
It's true, right? Construction is going to be a $20 trillion industry by 2030.
We can't live without buildings, right? So infrastructure building, isn't it? And we couldn't very focus on these industries.
That was very insightful. So how can we as students, we as engineering students, who want to explore more and want to get exposed more to private equity and Jagatul, how can we put in our efforts and where should we divert our knowledge to?
Yeah.
As students at this stage.
So, this is something that I found out when I started my investing journey as an angel investor, that there's very little knowledge, unfortunately, about venture capital. It's a very tight-lipped industry. But, our purpose is to bring in more younger generation and create a more ethical venture capital. So, we had traineeships every year. So we pick trainees from globally, basically. So you have a 6-month training program. And then after that traineeship, there's a chance that the trainee gets offered a paid internship, basically, in Nirman. So, a lot of firms like that. I'm sure there are other venture firms. Then if there's a deep interest and you start reading about, how investors are made, there are some really good books on venture capital. And I can drop you the link so you can put it on your podcast as well.
Sure.
And so read about, how it's done. And if someone is really passionate, then, start talking to VCs and see, you have to start from training. There are not many openings in venture capital.
I see very few the opening or very few opportunities for students like us to enter into this industry.
Yeah, what happens is because I told you about the fund life. So when a team is formed, it's based initial fund. So not the firm, but whenever a fund starts, the team is formed. And then the team is, that's the team for 10 years or 12 years. That they don't have to move or they don't have to move on. So very less, moving around happens.
It's based more on experience rather than
It's based more on experience and also, to knowing the industry.
so you mentioned you have a training program.
Yeah.
And then you offer an induction.
Yes, we did that. So right now we used to have a trainee from Mexico. Then, she got hired.
We'll invite you to IIT Mickey, but sure, but from the official placement, Sarek.
So I think that'd be great for us to come. But yeah, she came, she started with a traineeship, then eventually she's now actually getting paid, right? So traineeship lasted 6 months, it was really good. So, there's a lot of opportunities that we want to bring it to everybody, and especially people who are passionate about it.
So some advice that you want to give to the audience and the younger generation of today.
Advice on any particular any topic. Okay, I would say, one thing I've observed, like I just spent half day yesterday here interacting to some students, and I think everybody is so busy making solutions in marketplaces. So actually 2-3 things. Yes, we are chatting. I'd love to talk to the guys, and it's I talked to a few guys and they're working on marketplace. So these either marketplaces or the things that have been done in the past. So more of like cloning something that has happened before in the West versus pure innovating. So I was talking to some students here who are in mining or these core industries, but they're passionate about marketing or SEO or right. But I feel that the core industries have so much opportunity to really innovate. So I think that in your guys' generation has to really think about, this is India century. The most amount of young brains are coming out of this country. It's become the, work powerhouse of the world. So, how do we leverage that into
our strengths? How do you have we leverage this brain into innovation? So rather than being an innovation support for the West, right? How do we ourselves innovate? Like, how can we be the robotics? How can we invent something that is really groundbreaking in robotics? And you guys have like all the support. I see it, right? And from the universities and colleges perspective, what I saw is, there has to be much more um, match of, bringing in outsiders, bringing in domain experts and investors at the initial stages of when students are formulating Doga. Yesterday, I was at your, robotics labs and all, your Katsu center. And I saw that, some of the students who put like working hard at 1 a.m. at night and still, working on the robotics stuff. But what I figured is, they don't have the knowledge of, is this product already out there? Is the market really crowded? So at early stage, when they are just starting out, in that 6 months, if there's a mentorship program or something, that the college and the institutes can arrange where outside investors can come in and they become their mentors or advisors or whatever initially. That's really right. And then they can support them so they know that, listen, like I can pivot. So yesterday I was talking to a student of your guy, yours university, and I told him that, listen, what you're doing is quite with the robotics. It's done before. So you're just going to spend 2-3 years. So why don't you try this, do something in mobility? And that could have, and he said, like, I know how to, like, I know that area, that track as well, and I can try and experiment from. So I think that could result in a lot of innovative ideas because, again, like professors also have limited knowledge. So professors are, most of them are not run businesses before. So I think getting an outside perspective of folks who run business before, who are in that industry, who see technological solutions, and getting that out here would be really brilliant. And other universities also should do that, right? And yeah, this is like the best time to be an indie, right? And all the companies in the world, you go to the Middle East, you go to America, you go to Canada. Then it's all, most of them are being led by Indians. So hardworking, educated, you know, uh, we do be, we're known to be disciplined, right? And smart, right? So I think this is our time to kind of, really take some bold decisions. And your guys' generation can do that because you have that safety net of, what's going to happen? You always start from scratch. Like this is always something that was in my mind when I started companies. That what's the worst? I'm educated. I start from zero. And to date, whenever I start something, always, there's no plan B. So I always think of that perspective that I start from scratch. It's okay, right? I don't need any fancy things to live and survive. So I think with that kind of a mindset, real innovation can happen if you just try to focus on something and create more like innovation.
That was really insightful. I I'm sure that students watching you definitely have gained a lot of insights from what you mentioned, and that's it. I am Janam Shah, and this is Nikhil Choudhary with us. And apart from that, how did you like the campus?
I loved it. I loved it. As this year, like,
And how do you like the summit in the?
I didn't go to the expo. Yeah.
Okay,
So today I will go to the expo, but in general, it's like I love that it's driven by students. Uh, I was hearing some things from Utsah that the university should give a little bit more support in organizing
On the monetary side, that is always an issue. Monetary society, right? But and even that is an issue.
Yeah, but I think it's a great initiative. Like what you students are able to pull off, it's really brilliant. And wish you guys best of luck, and hopefully this keeps on growing every year, right?